you have provided us. So I will pick up the impact of these regulations that have on the financial sector and thus indirectly on the enterprise, because as far as I've understood, the financial sector players are obliged to disclose information about the sustainability of their financial products. And on the other hand, also banks select entities on the basis of the level of the sustainability of their business. That's what I have understood also in my practice. But as a consequence, the companies need financial support from institutional investors must integrate ESG factors into their business strategies. So having here Filippo Maggi, a partner at McKinsey, I would like to ask him his opinion based on his professional experience on the concrete and actual importance of the ESG disclosure, both for the credit assets and for the negotiating the credit terms, maybe also for small and medium enterprises that are so common in our environment. Thank you.
Yeah, thanks. Can you hear me?
Yeah.
Okay. Thanks, Marina. Indeed, I think, as you said, and as also Alain said, ESG is now becoming, the disclosure is now becoming a must from a regulatory point of view. I'm not going to answer that. There are too many lawyers that can explain that much better than me. I'm not a lawyer. What I'm focusing, as per the question of Marina, is really why it's important for corporates, and including SME, to actually provide the right disclosure about their path to become more ESG compliant. The main reason, the reason I'm focusing today, is really access to credit. Here in Europe, probably this is slightly different from the US world, but here in Europe, credit is by large done by banks. So capital markets are developed, but not so developed. So credit means banks in Italy. Now banks have been forced, but they are also moving by their own decision towards becoming more climate friendly and ESG oriented, which for a bank, for example, adhering to the Paris alignment or the net zero, means basically shifting the credit portfolio. Shifting the credit portfolio means, on the one hand, potentially trying and move on the capital market some of their portfolio, but the main way for banks to shift the credit portfolio towards ESG is really through who they are lending money to. Therefore, on top of the fact that they adhere to pacta like Paris Alignment, etc., ECB has recently, in the last 2-3 years, asked, so first of all, published a set of expectations for banks, plus the loan origination and monitoring directive. So because of that, banks are also forced to include ESG and climate considerations in every step of the process for granting new credit, for lending money. Which means that practically banks are really restricting credit to those clients, call it large corporate, call it SME, that do not have a good ESG profile. This happens in several ways. One can be if you have such a low score from an ESG point of view, they might have internal policy, and they're starting to have more and more internal policy by which they cannot lend you money. Full stop. On the other hand, the loan origination and monitoring directive is saying that is mandating the banks to include climate and ESG considerations also in pricing. And I have seen several large banks in Europe that already included ESG as one of the factors by which they can decide what pricing they apply for loans to clients. Both in terms of factoring, this is more for climate than for the more general ESG, factoring this in their credit risk models. Of course, as you know, pricing done by banks are linked to the credit risk of the borrower, and particularly for the climate part, this is now part of the credit risk scoring models. So if you don't have a good transition plan, if you have a difficult profile from a climate point of view, most likely the probability of default that the bank will get from their models will be higher, and that means higher rate for borrowing money. But on top of that, they are using ESG more broadly, and this is really for ESG and not only climate, in how they set the pricing. So I've seen the pricing as per their internal ESG score. So they developed a full ESG score by which they classify the score. All the clients, including SME. And that score is one of the elements by which they can derogate positively or negatively in the price that they make to the borrowers. So properly disclosing how your firm is evolving towards ESG, what are the positives, and of course, what are the negatives yet, will be, and is already, one of the things that can, first of all, give access to the credit, but also lower the rate at which you can borrow money from the banks. And to give also a concrete example of how these type of ESG scores are done, because that in the past, up until 2-3 years ago, would have been only a matter for very large corporates. You would buy data from VGO, from Moody's, from Standard & Poor's about listed and very large corporates. Nowadays, these scores are done with very detailed and granular data that the banks can collect from outside, but also you might have observed yourself, if you are in this market, you are more and more asked to fill in questionnaires with a lot of information about your ESG profile, which is one of the things that are feeding this score, which, as I said, ultimately enters in the pricing and in whether you can be granted credit or not.
Thank you, Filippo. Thank you. Thank you so much for this clear overview. I would like to take advantages of your presence, the presence of both of you here with us, because I know that in the audience there are members of the board of directors and advisors of multinational companies operating in sectors that are very focused on ESG issues that are environmental sensitive, such as renewable energies, oil and gas. So I would like to ask to Filippo if these companies operating in these ESG sectors can benefit from any dedicated financing in terms of ease of underwriting such financial instruments by bank.
Yes, no, that's a great point, which I didn't mention before. Indeed, dedicated financing is a good way because not much necessarily for the argument that I was making before of the ESG score and the fact that the banks, because the bank can evaluate then each specific lending, and so they could, even without having dedicated financing, they could evaluate that. But banks, on top of many other indicators that need to satisfy, they will, next year, they will also need to satisfy the so-called green asset ratio, which is an indicator basically that measures the ratio of assets that are considered green as per the EU taxonomy that Alain was describing before over the total. And the thing is that, I don't want to enter too much in the technicalities, but the thing is, in order to calculate this ratio, the numerator of the ratio, so the amount of green finance over the total, when you are doing general lending, you need to weight by basically the full profile of the company. So companies in sectors that are potentially more risky might have a 30%, 25%. So you lend money maybe for a very good purpose, but to a company that structurally, because of the sector where they are, because of how it works, the measurement, will have a 20 or 25% weight of the green component. Whereas if you can move to dedicated financing, that can enter at 100%. So banks are really looking for dedicated financing because that helps a lot from their point of view to satisfy this additional ratio and also to kind of show that they are switching the portfolio towards a greener version of that.
Thank you very much. And I get spontaneously now to ask Francesca.